Hi everyone. A question that comes up quite a lot is, what is this withholding tax if I take out money from my RRSP, my Registered Retirement Savings Plan? And in a nutshell, if you take out up to $5,000 in like one go because of whatever reason, an emergency, you need to pay for something and you don't have cash on hand, and you've spoken with your financial planning professional, and that makes sense because you've exhausted any other options. Because, by the way, this is not financial planning advice. This is just some general information. You should be talking with your financial planning professional with any kinds of decisions, especially when it incurs any taxable event like pulling money out of an RSP. But having said that, what happens is this: if you finally decided, yes, I need the money, and you contact your firm or your financial planner, if you take up to 5,000, so 0 to 5,000, the withholding tax is 10%. And what happens is that your financial planning institution, your bank, or wherever you have your RRSP, they will withhold that 10% automatically and remit that to the CRA on your behalf, and you will get a tax slip for that year when you do your taxes the following year, that you can show you've already paid that tax. So effectively, if you take out 5,000, let's say that amount, $500 is 10%, that gets sent to the CRA, and you get $4,500 to your bank account. Now, where it can get a little bit more confusing is that if you take more than 5,000, so $5,001 to $15,000, then the withholding is 20% on that full amount. And if you take over 15,000, so 15,001 and above, that withholding rate is 30%. So you should be aware of that when you are looking at getting some money out of your RRSP. Just know that it's basically tax prepaid that you might have paid anyway, because the way that they're looking at it is that it's when you take money out of your RRSP, that is considered an income, because while it's in the RRSP, it's tax sheltered, it can grow tax free, tax sheltered until you take it out, but eventually when you do take it out, it is considered income into your household. So if you're not making any other income throughout the year, if you're unemployed and that's why you're taking it out because you've lost your job, then most likely you won't have to pay that much tax anyway if there's no other income that year, but you still have to prepay that tax in advance. And then when you do your taxes at the end of the year, in the next calendar year for the current year, then you may get some of that tax money back if you've overpaid. So a little bit of a tidbit. It's a lot more deeper than that, but just so you know, this is the withholding tax on withdrawals from RRSPs. A little bit similar and different for RRIFs. We'll get into that in another video, but if you have any questions or you like this video, give it a thumbs up. And if you have any other questions you'd like me to address, please put them in the comments below. I'll make sure to make a video on that at a future date. Thank you. Bye-bye.